Do you know that beyond connecting the point A and the point B of price movement, there is a more effective way of trading the trend line strategy? In this video, I'll be sharing with you the most effective and accurate way that you can trade the trend line strategy that will save you from market manipulation and from being a victim of liquidity sweep. So, in a normal trend line trading scenario that you know, it is expected that whenever price moves this way, here is your point A. You usually take this zone as your point A and your point B. So in connecting trend line, you will always need two of these structural points. In an uptrend, you will need this higher low and another higher low in order for you to connect your trend line. So you will be connecting your trend line to this point A and point B this way. However, there are situations, scenario in the course of the price movement. You are expected to make an entry whenever price retouch the trend line, and that is your point C. So your first entry, as far as trading the trend line strategy is concerned, is that your first buy entry is going to be at your point C. So you are expecting this price to pull all the way to this point and then push to the upside. But there are scenarios whereby price will not touch your trend line. There are scenario price will come to this zone and then continue to the upside. In such scenario, price will not touch your trend line. And if you were only told that you should buy when price touches your trend line, it means that definitely you will not be making an entry, because you will observe at the end of the day, price did not touch your trend line. And there are instances whereby price will break through your trend line and then later on went back again. So in this type of scenario, if you were to have bought, maybe when price came here, you got a bullish candle which gave a little range, and then you bought, putting your stop loss below the candle as you were told, then this would have been a liquidity sweep. This movement would have taken you out because it would have hit your stop loss, and then later you discover that price still went in your favor. This is the challenge that most beginners traders face when it comes to trend line trading strategy, and it makes it look as if this trading strategy is not working. The truth is, this strategy works, but you are going about the strategy in a wrong way. And that is why in this video I'll be showing you exact way you need to follow this strategy, how you can identify your point A and your point B, and what happens afterward, how you can avoid being a victim of liquidity sweep, and how you will be able to make effective entry even if the price did not touch your trend line. So let me highlight this. First, we'll have this movement to the upside, and we'll have our trend line being connected this way. Now, this is a textbook example. This is your point A and this is your point B. So you will see it play out perfectly the way you want it to be. Then you buy from this zone. Now, let's look at a real price market scenario. For instance, in this movement we are having here, this is point A, this is point B, right? Now let's connect our trend line to this point. So we connect our trend line, this is what we are going to have. So let us go ahead to do that right away. So I will pick my trend line tool and I will connect these 2 points. So I have done this perfectly well. Now, look at this now. I have successfully connected my point A, and this is my point B. So I am expected to make a buy entry at point C. So when I get this price action retesting this and giving me this bullish engulfing candle, that is my buy entry confirmation. That is, this particular scenario plays out perfectly the way it is meant to be. But look at something here. Something happened at this particular zone. Here you realize that price break out of that trend line, which is the two candles that you are seeing. So which means that after making a buy entry from this first touch, definitely the stop loss will be somewhere here. Yeah, let's say the stop loss is here. And then look at what happened. In this case, price did not touch the stop loss. But however, this plays out beautifully well. So this is a perfect textbook example, and we can see how this plays out beautifully. So let's look at this downtrend scenario and see exactly what happens and how we can take advantage of this. Great. Now we have a peculiar issue that we need to handle here. Now in this scenario, this is point A that we have marked. We have marked this point A and this is point B. So we have connected our trend line. So we are waiting for price to do what? For price to pull back towards this trend line so that we can make our sell entry to the downside. But in this scenario, look at what happened. There is a gap here. Price did not touch the trend line and then price sold to the downside. So if all you were taught was to wait for price to touch your trend line first, because to you now this trend line is serving as a dynamic resistance, because this is a downtrend, it's serving as a dynamic resistance. So you were expecting price to hit the trend line in particular before it will reverse for you to sell. You will eventually wait and waited in vain. If that is the scenario, same thing applies to this one. You realize that price came here, pull back all the way to this point, and then push down again without touching the trend line. So the question is, what exactly is responsible for all of this action of price not touching the trend line and the reverses? And how do we handle this issue in a real price scenario such as this? Number one, the reason for this particular issue is that perhaps from this movement that happens all the way to this point, which is the range you are expecting a pullback from before you make your entry, it means that in this move, maybe there is a fair value gap when price was making this move, which is an imbalance. So what happened? Price will only pull back to fill into that imbalance and then continue. Another thing is perhaps there is a smart money cube in that zone that price needs to go and retest. So price can retest the smart money cube and refuse to test your trend line and reverses. Another scenario is there might be an internal liquidity that is being built up in that zone. The price will only take away that internal liquidity and continue its movement in the original direction. Like in this scenario, we have this movement here that build up internal liquidity. So this is internal liquidity. So what happened here was that price push take away this liquidity And immediately that liquidity was taken, price gave the right move it is meant to be. So if you were waiting for price to touch this trend line, you will obviously wait and price will continue to the downside. It will not look like you wait in vain after almost a pullback that took 4 to 5 hours. And once you have missed that, it means that you still have to wait for almost more than 7 hours to before another pullback again, before you can even think of making an entry. So here there was an internal liquidity that was taken, and for that sake, price could not reach the zone of the trend line. So these are the likely factors. There might be a liquidity that price need to take, an internal liquidity such as in this one that price took. There might be a fair value gap that price needs to fill, and then price fill the fair value gap and reverses, or there is a smart money cube that price went to mitigate and then continue to that downside. Now, having established that, let us proceed. How then do we remedy this situation? Number one, you need to learn how to identify liquidity. Unlike in this zone, you see as if price range all of these points. So there is a liquidity that price took here before price get to this zone. And for this price to come all the way here, you see that there is a kind of range here. There is a liquidity sitting here that price move here to take. So price will always move in the direction of liquidity. Now, having established that, another way we can handle this is by using our Fibonacci retracement tool. So in this scenario, I'm going to flip this level. As you can see now, I'll flip that high all the way to this point. So you can see that. So price now pull back all the way to 61.8. So if you had your Fibonacci retracement tool active on that structural point, you will now be able to use it to find your entry. So immediately you notice that price begin to reverse it from any of this zone, even without reaching your trend line. It is a confirmation that is a valid entry. So take note of that. That is one way to remedy it. Another way is for you to identify zones of one. You can identify your zones of order block. For instance, this is the last order block before that particular move. So you can identify your order block. So you can see that. So even in this order block, price did not retest that particular order block. Then another way to do this, after that obvious movement, here is the next movement that we had. So we put our Fibonacci up to this level. What are we having? Beautifully well. So you can see that now, using the Fibonacci from this zone to this zone, the pullback was 100% exact pullback. So even when price did not retouch this trend line, it is still a valid trade for us. So that is one of the ways that you can go about trading this. Another way to do this is for you to treat your trend line as a zone. Don't see your trend line as a line. So how do you do that? You can add up additional trend line. For instance, in this scenario, I will pick a trend line and add it up, because previously I have seen what price did in this zone. Okay, that is the original touch. Good. So that is the first movement of price. And then afterwards, look at what happened. Price pulled back to somewhere here, did not touch the trend line, came back until we had this one that touched the trend line that give us our point B. So if I want to now connect my trend line, I will now take note of this point that was close to your trend, to my trend line. So I'm going to mark it as another zone. Look at it. I will connect the second trend line to that particular point. Do you see that? I've connected this second trend line to this particular point. So what will now happen? I will now observe price behavior. Now do you see that this particular one now pull back to this touch that same trend line where this one touched. So what will I do? I'll be considering all of these points as my trend line zone. So even if price did not touch my trend line, I will see it as a zone of trend line. And once I get a bullish reaction, I am going to sell from this zone. And my stop loss, remember, I will not put my stop loss under this candle. My stop loss is going to be under the other block that I have marked. Under this particular other block that I've marked previously. Most of us, what we do is that we put the stop loss directly under the trend line, and that is where we are getting it wrong. Your stop loss is supposed to be under the previous order block. That's where your stop loss is meant to be. So this is your stop loss, not under this trend line. Why? Because price can choose to do this. Price can choose to come break this trend line. So even if price break this trend line and push below it into this other block, most of the time we say trend line has been broken, and then realize that price will take you out, and then price will still continue in your original direction. That was because you were not treating this point as a zone, and that was because you did not mark your previous point B, the other block, out. So in as much as price break the trend line and price did not break this particular order block, we are still in a downtrend. So what happened here is nothing but a liquidity sweep, because the market movers always know that you always put your stop loss under the trend line, and as such you become victim of that particular price scenario. So that is exactly how this price movement happens in most of the price scenario. So, and it is very important that you take note of it. Now let me show you one example. I think this is a perfect one. In this zone, let's see, do we have it? No, we don't have such there. Okay, let's look at this. Yeah, this look very perfect. So this will be our last example. We are stopping on this so that the video don't be too long. So remember that your first move, yeah, this is the first move that you got. So let's mark this as your first move. So what is the first move? This was your first move. You got this point A, and this is your point B that you connected your trend line to. It was this point and this point, and you have your trend line connected. Then look at what happened. You were now expecting price to come back, retest your trend line so that you can buy to the upside, which is the right thing to do. But then, this is what later happened. Price came into this your trend line zone and break out of your trend line. You can see that. And so because price break out of this trend line, you will even assume that already price has taken you out. Because there are some of us that immediately price pull back to our trend line. We don't even wait for a confirmation. We just buy. Immediately price touch the trend line, we just put our buy trade. Or maybe we have a pending order. Once price touch it, it gets activated. It is a very, very wrong way to trade. You must wait to get a confirmation. The fact that price came to the trend line is not enough to buy, then how do you know? Because it was sellers who took price down. You will need a confirmation. Something must inform you that, okay, there is now presence of buyers in this price. And now that there is presence of buyers in this price, let me now make a decision. So that presence of buyers will have to be presented to you by a candlestick formation. So what candlestick do you want to see? Until you get this bullish engulfing candle, you are not buying. Until you get that bullish engulfing candle, you are not making any choice. You are not permitted to make any choice until this candle presents itself. So there are many people who already bought immediately price touches here. And then they put their stop loss very tight and price took them out. So you need to wait for confirmation. You need to wait for validation before you can be in this trade. And remember, if you are not treating this point as a zone, you will assume that price has invalidated the zone. But if you are treating it as a zone, this becomes your second trend line connection. Because immediately price break out of it, you gently go back, pick a new trend line and connect it under this recent one. So this is how exactly you are expected to mark it. So you are now treating this point as a zone. Look at what happened again. Price came back, retest this one. Fine. You are in this buy. That's correct. But look at what happened. Price came back, break through all of this zone to the downside. So which means that anybody that bought around all of this zone will be a victim. But the question is, has this become invalid? And that is what I want to prove to you. Always mark the last order block. This point, mark it. This is another block. Perfect. So you see how I marked this order block. So when this price came into this order block, even when price break this trend line, I know that this is manipulation, this is liquidity sweep. So I will be patient enough to wait. I will now know that price has changed direction or my trend line trading has become invalid if price closes below this order block that I marked. As far as price did not close below that order block, it is still invalid. And in this case, look at price came into that order block, gave us two double pin bar candle. And immediately that becomes a buy confirmation entry. So you can see how it plays out perfectly well. Look at that. You can see the momentum with which price left that zone. Now look at the mystery behind it. And immediately price left. Look at what happened. Price now went back and began to respect the previous trend line that you have drawn. Look at it. If you extend this trend line to the front, see price came back again, respect it. I believe you have learned something. Thank you for watching. Please, if you have not subscribed to the channel, what are you waiting for? Do not forget to give this video a like. Please share, subscribe, turn on your notification bell so you'll be the first to get notified when we upload our next video. Thank you and see you in the subsequent video.